Let's start with the Fed. It seemed that the Fed was happy to move a little bit in the direction of the market and where the market was positioned in terms of cuts. But then as soon as the Fed moves, the market moves some more. So the Fed's still not on the same page as the market, but it tried to get a bit closer, I suppose, yesterday.
Yeah, I would say so, Anna. It feels like the Fed basically endorsed a lot of what the market had already concluded, i.e. that, we're okay. We're heading for a soft landing here. Inflation is under control or coming under control, and there will be scope to gradually lower interest rates later on in the year. Now, there's two questions, right? Has the Fed got this right? I looked at some of the commentary. Overnight, they were talking about a victory lap being declared. And I wonder if, there was some skepticism or cynicism within that sort of maybe the Fed is patting itself on the back a little bit too early. What could go wrong? Maybe inflation comes back again. It hasn't quite squished it down yet. Maybe we get more wage growth. Obviously, the job sector is still very strong there, and the Fed might have to reverse, which would be pretty embarrassing. Or maybe worse still, the Fed is looking for the economy to cool, but not go, kind of off a cliff or anything like that. But keep a close eye on that data into the new year. Is consumer spending going to start slowing? Are we going to get to a point where, all of a sudden the outlook looks a lot worse? That, I think, is why the market is pricing in the risk of the Fed having to go much further than it really is at the moment, sort of saying through the dot plot and stuff like that. And so that's hence that additional pricing in the market. Give us an inch, we'll take a mile.
OK, absolutely. Let's move on to other central banks. No time to linger this morning, Paul. We have plenty of European central banks set to deliver their decisions. Are we expecting, what kind of pushback against market expectations are we expecting to see at the ECB, do you think, Paul?
I think that the Fed has made everybody else's job that little bit easier by signaling that they're comfortable with the outlook. The ECB has a difficult scenario because the economy is obviously looking quite bad, and we already had that pivot from Schnabel, which has set us up, given the market a little bit of a green light to start pricing in rate cuts. So, I'm sure that all of the central bankers will want to project the idea that they can still hike further if they need to, that they're happy to hold interest rates higher for longer, but at the same time, they're starting to talking about when it might be the right time to begin lowering interest rates again.
Yeah, so that's the ECB story. The Fed saying they are talking about then when they start to cut. The Bank of England has up to now said it's too early to have those conversations, Paul.
Yeah, the Bank of England is the last to the party, maybe, and they will want to push back those expectations as far as is possible to really try and get that inflation under control, which is higher than everywhere else in the sort of G10 environment. So watch for louder pushback from them, perhaps, and as a result, maybe the pound continues to push higher.